Aloha, everyone. Welcome to Java. This is Tuesday, October 3rd, 2023. Thank you so much for joining me this morning. If you would take a moment and like the video, I would really appreciate that. If you're new here, please consider subscribing if you like the material. So I would like to go over our favorite risk indicator is in the extreme range, 312.8, kind of going off the scale. We need new scale colors. Came up with a couple of really good ideas between blood red and also molten metal. Kind of liked that one personally for the area that we are in right now. So if we're looking at the futures, are kind of mixed. So if we're looking at the sentiment, it's mixed, neutral. The market, for the most part, is still in a larger downtrend, and the Russell, which is basically an indicator of the smaller businesses, has gone negative. So we're looking at dollar gaining pretty good strength. It's over 107 now. And of course, the 10-year yield is also 4.7, which is far above that comfort level for the equities market or stocks. So in this environment, we're watching incredible instability, and I'm typically early to things. Usually have pretty good track record, but I'm early. And so not financial advice, but what I'm doing currently is I am selling into strengths as far as equities. Precious metals are going on probably their final sale for this year. I expect their prices have been under pressure, gold and silver, and they will probably go down a bit more. I don't like picking tops and bottoms. I'm pretty happy with just averaging in. They are on sale at the moment and probably have a little farther to go. So I am moving more into that as well as physical cash, not in the bank, and hedged positions only. So still doing some trades, short-term trades. I'm mostly an options trader, and the time period looking forward for all of this occurring that I'm looking at is probably between 8-12 weeks, so to the end of the year. We don't know what's going to happen, something serious. We're in black swan range. So we're just basically kind of waiting for the straw to break the camel's back, proverbially speaking. And so, with this position that I'm going into, we've got the beans, band aids, and bullets back up, which is kind of something we talk about with prepping for whatever might happen. So, going over the calendar today, pretty thin. We've got the Atlanta Fed President Bostic. He's going to be speaking today. And then we also get some information for job openings. And this was just a little bit of the percentages it drops. And this is actually in metals mining. So metals mining gets hit a lot more than the precious metals, which is a little interesting in my view because it's mostly the paper that is pushing the prices, meaning the contracts on these, not the physical metals or trading themselves. So, looking at what central banks are doing, we've got Fed's master came out saying that we need one more rate hike probably by the end of the year. And Fed's Bowman is also kind of backing this up for the United States Federal Reserve. But we've got the ECB kind of going along with this narrative, saying they've still got some work to be done. And they also had another banker that had called for likely rate hikes, at least one prior to the end of the year. Now, the big question that we're watching, and there actually isn't much in here because they're being very quiet about it, relatively speaking, is the Bank of Japan. So, between these currency wars and the levels, and we don't like big fluctuations because one small rock in this pond could cause huge waves. So, that's kind of the one we're keeping our eye on to see what they do with the rates. So this is just a little graph as far as the Russell ending up in negative territory. We're looking at basically, and this goes across a lot of the charts that I'm seeing on the major indices, is that we've got this double top going on, which is very bearish in the longer term. So this one talking about bonds, oil, and the dollar, what investors need to know about these headwinds for stocks. Well, we talk about this a lot. The bonds spiking, the 10-year treasury is the one we watch. The dollar relative strength, of course, those are both high. They're bad for stocks. Oil has pulled back a bit, but I expect it to continue because we've still got the only thing they're looking at crushing that demand is basically the lack of demand, or if we lock down again. I don't see that happening anytime soon. We'll see. We'll keep an eye on that moving forward. So, US Treasury yields climbed back to the 15-year highs yesterday. That is a complete headwind for equities. As you know, it's no surprise to anyone here, Zillow is quitting the home flipping business because they cannot forecast the prices. So they're trying to buy and sell, and they're finding out they're losing on the end of this one. So they're just getting out this, which is the smart thing to do, in my personal opinion. So we've got another story about the union. These are the dock workers union, and they're filing for bankruptcy. So things are starting to hit some headwinds, even with the unions and the labor market. So we had this story come out, which I think is completely laughable, and talk about pot calling the kettle black. US government seriously concerned about corruption in Ukraine. Well, they may mean US corruption, because we've got quite a bit going on there with our personal politicians. Not going to go into that, but there's definitely some things that have been going on there for some time. So China's Tianmin sees trade with BRICS up 28.7% in January to August. So through this year, their imported goods, basically, and I wanted to bring this up because it tells a little bit of exactly what they're trading: coal, lignite, metal ore, and mineral sand, as well as agricultural products. So they've also got mechanical and electrical products and labor-intensive goods. So China increasing their bulk on this trade is going to it might be the thing to put the pressure on the dollar that we need to kind of float through what's going on here, because the dollar getting too strong is not good. And I think that the debt instability is really showing, and the central banks are now kind of floundering as far as trying to keep a lid on this bubble that is kind of looks like it's starting to burst. So if you would take a moment, if you haven't already, and like this video, I really appreciate you all being here. And I got a couple of lava updates, things I want to bring up. So the first thing is, I'm hearing a lot about this nationwide emergency alert to be sent to all cell phones. This is for tomorrow, because it is Wednesday. And I think that this is just what it is. They are testing the emergency alert. I don't know about what they're doing, still sticking mine in Faraday cloth, and won't have it on because I have no need to have it on at this total amount of time. But I encourage everybody to do what they're comfortable with, would be one way to do that. But I think the underlying structure here is really what do we need to pay attention to: the move into 5G in particular, and the substructure for all of these that is being set up. And particularly, the FEMA is behind this. So aside from that, I mean, this is completely off from the markets. And then we got this other story about the nuclear attack exercise to occur the day before. So this is happening today. And we've got some other errors. We've got some nuclear munitions and things that are moving around the world. And we are keeping an eye on that as well. So I always put these in the lava updates last, because they don't have to do at the markets. That way anybody that wants to get to trading can. So if you have anything that you would like to hear about, or any comments on this, as far as how this is structured, please leave it in the comments below. I could really use some feedback on how this is running, because I want to get this news out, and I would like to do like what everybody wants to hear. So my last thing I would like to go over is that the United States military, they're modifying their requirements for enlistment. So the United States has been struggling now with weaker military. Less people want to sign up. Both sides have a very good qualified argument, in my opinion. And so this is just talking about the shortages. So talking about the Army will fall short by about 10,000, the Navy by 6,000, and the Air Force by 10,000. So they're talking about less than 23% are even qualified to serve because there's physical conditions. And that out of that, most are not even interested in serving. And, why would they be? Because the ones that are fit and ready to serve are having a very difficult time justifying what they would have to put on the line, or being asked to put on the line, in order to support what is going on in the United States. So anyway, without injecting too much of my opinion in that, I would like to wish you all a wonderful trading day. Green, if you're going to be trading, urging caution in the winds of everything that is going on, and wish you all a wonderful day in general. And until I see you again, my friends, stay free.